Hello traders and welcome to another video review. Today is Friday, the second day of the October 2020, and we are going to take a look at the Forex calendar because today is NFP Friday, non-farm payrolls day, which is very important data released from the American economy, of course. And we are going to take a look at the euro dollar and S&P 500 index because those two markets are highly correlated with the NFP payrolls data release. So we will see how these two markets can be managed just before the data from the employment from the US employment is released. So bear with me for this couple of minutes and we will see what are the scenarios for the S&P 500 and of course for the euro dollar. So let's just dive into the Forex calendar, and as we can see here, for the Friday, October 2nd, we got only three important data releases. Important, it means that they have a high impact on the Forex market. The first one is the consumer price index data that will be released at 11 o'clock a.m. So these are the data for the month of the September. The previous reading was minus 0.2%, and the forecast is minus 0.1%. So it's a slight jump in a consumer price index, which means a slight jump in the inflation, basically. So we will see how this will go for the eurozone, and of course for the US, we got the two very important data release scheduled for 2:30 p.m. This is of course unemployment rate and, as I said, non-farm payrolls data. The unemployment rate is expected to decrease from 0.4% to 0.2% for the month of September. So the market is expecting a nice decrease in unemployment, which might be very good for the economy, of course, because it shows that the employment is gathering momentum. And the second thing is non-farm payrolls, which are forecasted at the level of 900 roughly, and the previous reading was 1,300,071. So basically this is a nice jump, and I would be surprised if there would be at least anything below 1 million. Basically that will be kind of a disappointment for the markets, because again, this will be the sign that the US economy is expanding, is growing slowly after the COVID, of course. And the second thing is Donald Trump needs this kind of data because the non-farm payrolls will be the last one before the election night. So this is the last non-farm payrolls we can get before the election night. So basically the running president of the United States, Donald Trump, apparently needs better than expected data to show that the economy is expanding and he is managing the country very well. So expectations are rather subdued. 900,000 the forecast is like just a little bit underestimate, I guess. It might be even something above 1 million. So it would be very very good for the US economy. So two markets we are going to take a look at, euro dollar and S&P 500. We will start, I guess, from the euro dollar. Let me just switch to the chart. As you can see here, I'm using the euro dollar data on the daily time frame chart. So what I have on my chart is last swing from the lows of the March. It's 22nd of the March to the doji candle. Doji candle was made on the 1st of the September 2020, and as you can see, this doji candle was made at the level of 1.2012. So this is the candlestick pattern that indicates a potential trend reversal, right? We got very nice signal here. Doji candle on a daily time frame chart This is absolutely spot on a candlestick pattern. Since then, we tested this short-term trend line support, this black one, as you can see here around the level. This is 1.1761. Then we jumped a little, about 50% of this last small wave here, and then as you can see, we have a first breakout, bounce, and the second breakout, of course, went way below this trend line support. We stopped at roughly 1.1630, and since then we got this candlestick pattern, which is of course bullish engulfing. So the bullish engulfing was made roughly about 1.1613, and 2 days ago we are trading just around the level of 1.1770. So that was the top. So let me just mark it. This was the top for the euro dollar. And on the daily time frame chart, as you can see, we can expect two things. The first one is just one more level I would like to point out. There you go. The first thing is that if the data will be better than expected, so it will be better than 900,000 jobs, then of course we might expect that the risk is on. What I mean is we might expect buying of the euro, not the dollar, because this would mean that the economy is expanding, is recovering after the COVID pandemic, and that would means apparently that okay, everything is fine, everything is all right. We can buy the risky asset, and the risky asset is of course euro, not the American dollar. So if the reading is better than expected, the market might react with another wave up. Where it can go, as you can see, we got this trend line here. It has not been tested yet. It was almost hit around the level of 1.1770, but it was not tested yet. So the scenario for where's my arrow? There you go. The scenario for the better than expected data is to bounce towards this trend line. So we will break 1.1770 and we will go further north towards the level of 1.18, somewhere there, 1.18, which is the round number, nice round number. So that's the first scenario, and this is the positive scenario. So let's make it better than expected data. It will be green arrow. So there you go. This is the green arrow, better than expected data. If data will be worse than expected, then of course we might break below this support. We have two potential supports here. One is oldest one, 1.1696, and the second one is of course this blue line, which is 1.1679. So there is only like about 20 pips between these two levels, but we can say that in the case of the worse than expected data, so that will be way worse than 900,000 jobs, we can say that possibly the market will sell the euro and buy the US dollar, because the US dollar is the stable currency, which is reserve, maybe not stable, but this is reserve currency of the world. So it means that we will have this flight to safe haven, price action and the market behavior. So this is the scenario for the worse than expected data. So let's just say that the expected target level is in the case of the worse than expected data is 1.1613. But let's just go to the 4 hours time frame and let's just see quickly. Yeah, there you go. One important thing, because as you can see, we got this technical resistance here. But what I would like to put on the chart for a second is Fibonacci retracement, because I think it will be like, there you go, there's 61% of the Fibonacci retracement of the previous wave down. So what we have here is of course another important level, 1.1771. As I said before, this is as well 61% of the Fibonacci retracement. So any breakout higher above this level is of course rather bullish, and then we should see the level of trend line resistance, as I said, and then if we will get enough momentum, the euro dollar might even hit the area of 1.1870 to 1.1907. So that's the scenario for the euro dollar. And let's switch back to the daily time frame and let's see anything interesting on the S&P 500. So the reaction on the S&P 500, as you can see, might be quite similar to the euro dollar, because it's the same market behavior in the case of the data release that are better or worse than expected, way better or way worse than expected. So where are we trading right now? We are trading just below this technical resistance, 339.23 points. So this is the technical resistance. The next one is a kind of an intraday resistance located at 343.06, and that's the target resistance in case that the data will be way better than expected. So we're gonna buy the risk, and the S&P 500 will continue to move higher. In a case that the data will be worse than expected, so we will basically have a flight to safety, or maybe the investors will just take profits off the table after this nice wave up from the 23rd of the March to this of course high of the 2nd of the September. So in that case, we might test 329.55 or even go lower, way low, because the next technical support, which is a kind of a important technical support, is roughly between the levels of 319.64, and this is the second level, 323.27. So those are two levels. Let me just put the other one on the chart. There you go. This is the kind of a zone, supply zone, demand zone for the bulls, basically, right? If this zone is violated, if one of this level is clearly violated, of course we can go way lower, but it must be a devastating data from the NFP to break below this support in one session, but it's still possible. The good news is that we broke above this trend line here. As you can see, the market did it on the 28th of the September, so it was just at the beginning of this week, and right now we're just trending higher, but we're going higher. But as you can see, the first technical resistance, the second technical resistance, and the price has been capped already. So maybe we are waiting for the better than expected data from the NFP, and then the rally can be continued higher towards these two levels mentioned on the screen. So that's my point of view on the today's NFP data release. I hope you guys enjoy it. We got our levels on the chart. We can expect only the correct market price action during this data release. So let me just finish here, and see you guys next week for another video analysis. Take care and bye bye.